It's February 14th, JLD here, and welcome to MSTR Today in the Treasury Titans. Nothing in this video is financial advice. And if you celebrate Valentine's Day, happy Valentine's Day to you. I know that Michael Saylor is going to be enjoying the weekend, at least from this image. Looks like he is calm, cool, and collected with his orange shades on because there's been some good stuff going on in the world. Let's move on over to Adam Livingston, who says Bitcoin is the first system that makes the past expensive to alter. That sounds abstract until you realize that money is mostly memory. Who paid who owns what the supply is. Fiat memory is editable by design. Bitcoin memory is adversarially hardened. That's a civilizational upgrade. I almost forgot how hard it is to read Adam's post. Okay, Zinc says, it's going to be really fun when the volatility for Stretch and SATA decrease enough for it to be worthwhile to trade between the two in tax advantage accounts for a double whammy dividend payout. Not sure how long this takes, but the potential is insane if you can get it right. And basically what Zinc is saying is that the ex-dividend date for Stretch is typically around the 15th of the month. Like this month, it was on the 13th or the 12th. I can't remember which one of the 2 days. Doesn't matter because I'm currently holding right now. But there will come a time when SATA is also just jammed up at $100. And when that comes, then the ex-dividend for SATA is always at the end of the month. So you could technically sell Stretch and then buy SATA, and then you'll be getting two dividends. You'll be getting an 11.25% annual, which is what Stretch is paying right now, and I believe SATA is at 12.5% right now. So, I mean, you are literally at that point getting like over 23%, which is, almost 24%, which would be absolutely mind-blowing. If that arbitrage exists, it'll be so much fun, especially for those of us like myself who live in Puerto Rico. And it's all tax advantage. We don't pay capital gains tax here. So very interesting things to come. British Huddle says, I see bulls in the sky. Do you? I think there's no misinterpreting that. Those are two bulls going ahead. We have Adam who says, imagine the fuzzers in 5 years when Strategy has missed zero dividends and over 1,000 years of dividend coverage on their balance sheets. What will they say then? And by the way, the fuzzers will find something to say. We just don't know what. So Adam's asking a genuine question. What will they say then? Because we're curious. 99% of companies fail to beat the S&P 500. Do you see the value of Bitcoin outperforming the S&P 500? Do you see the value of Strategy outperforming Bitcoin? If you cannot outperform the S&P 500, then buy and hold Bitcoin. If you cannot outperform Bitcoin, then buy and hold MSTR. It can really be that simple. And this is just another failed attempt to beat the S&P 500 over a 5-year period. S&P did 73%. Pershing did 65%. Bitcoin for Corporations posted that this week, digital credit saw some of the lowest trading volumes over the last 20 days. Also, Stretch breached 81% of all trading volume on Thursday. Today, it had almost 70% of all trading volume. I mean, look at this absolute beautiful insanity. It is just a huge spike there. Good stuff there. You can see Stretch is just dominating all of this. I mean, this is why Michael Saylor called it the iPhone moment for sure. I think we're going to see Stride and Strife have a little bit of a field day coming up here because, they're coming up on the quarterly payments. So the last one was in December. So there was January, February. So it'll actually be, March. So that'll be the next time that you can get the 3 months worth of payouts, and that'll be for Stride, Strife, and Strike. So I think you'll see a little more volume there than normal because of the every 3 month thing. The Bitcoin for Corporations says by the end of February 2026, digital credit instruments will have paid a collective $435 million in tax-deferred return of capital dividends. Stretch alone will have paid $180 million. What will it be a year from now? I mean, look at what's happening here. Strike, Strife, Stride, Stretch. And again, this Stretch is just going to keep stretching out. This red in a few months is going to just get bigger and bigger and bigger. I'm not necessarily thinking that these are going to get smaller, just smaller in comparison. So exciting times ahead. Samson Mouse says, everyone is starting to see how powerful Stretch is. Just a heads up, the Metaplan has something similar called Mars on the way. I'm pretty sure Japanese people getting 0.3% with their savings accounts are going to be somewhat interested. Plan accordingly. Samson, I have planned accordingly. Zinc says strategy can easily raise $1 billion on days like this to buy more Bitcoin. Soon enough, Fong Li said they will transition away from the common stock to the pref to fund Bitcoin purchases. I'm expecting multiple digit days, double-digit days ahead for MSTR soon. So bullish. And I actually don't think that Zinc's is correct here. I don't think Fong Li said or thinks are going to transition away from the common stock soon. They might do it eventually, but as Michael Saylor said many, many times, they need to keep expanding the capital base so they can keep selling Stretch. If they stop selling MSTR shares and expanding the capital base, they're going to have to at some point stop selling prefs. So you've got to play that balancing game. And Michael Saylor's talked about that on multiple interviews, but beautiful day, as you can see here for MSTR. Let's go. And we have a great video clip of Michael Saylor coming up as soon as we get back from thanking our sponsors. Scams and identity theft do not start with hackers. They start with your personal data being easy to find online. Your home address, phone number, and employment history can be sitting on dozens of websites right now, waiting to be used for fake loans, targeted scams, or worse. That information is spread across people's search pages, shady directories, and commercial databases you've never even heard of. That's where Incogni comes in. Instead of spending hundreds of hours manually opting out of these sites, Incogni automates the entire process. They hunt down your data and demand its removal. Incogni doesn't just do this once. They continuously monitor these sites in the background to make sure your data doesn't reappear. I recommend the unlimited plan because when something isn't covered automatically, Incogni's custom removals feature lets you send in a specific link and a dedicated privacy expert takes care of the manual removal for you, start to finish. Remember, if they can't find you, they can't use your data against you. Take your data back risk-free with Incogni's 30-day money-back guarantee. Use code MSTR for 60% off an annual plan at incogni.com/MSTR. That's INCOGNI.com/MSTR. When you want more, start your business with Northwest Registered Agent and get access to thousands of free guides, tools, and legal forms to help you launch and protect your business all in one place. Build your complete business identity with Northwest today. Northwest Registered Agent has been helping small business owners and entrepreneurs launch and grow businesses for nearly 30 years. They are the largest registered agent and LLC service in the U.S. with over 1,500 corporate guides, real people who know your local laws and can help you and your business every step of the way. Build your business identity fast with resources, forms, and step-by-step guides, even before creating an account. Sign up to manage your business hub with lawyer-drafted documents. Northwest is your one-stop resource, makes life easy, and keeps privacy automatic, never selling data anywhere. Don't wait. Protect your privacy, build your brand, and get your complete business identity in just 10 clicks and 10 minutes. Visit www.northwestregisteredagent.com/JLD free and start building something amazing. Get more with Northwest Registered Agent at www.northwestregisteredagent.com/JLD free.
And 10% against a 30% ARR over 20 years, it works out to about 90% of the economics go to the issuer. And then it just comes down to a question of how you're going to construct the credit. And there's stupid credit, and there's difficult credit. And I guess I'd say there's a simple rule of thumb here. If some guy with $1 billion is sitting across the table at you, offering to give you the money, it's probably in their interest, not yours. If I wanted to sell $1 billion note that had the warrants of equity, that had the credit protections of a bond, and do it with a single counterparty, I would have 25 companies staying up all night to do that deal, and it would be done tomorrow morning or the next day. It would be awful for my equity investors. It would be bad for my capital structure. But there's a certain amount of money that'll come to you that's easy to get, that's just not necessarily good for you. And then there's the money that you have to work at. Like, I'm going to build a retail channel to 10 million retail customers and sell them a preferred instrument without the credit risk, which has got huge amplification for the equity. That's harder. It's hard to do the things that they're going to create massive shareholder value for your company. It's easy to get big and do things that basically transfer your equity and your credit collateral to a investor. So I would just say the business is going to explode. There's going to be 1,000 ways to win. We're in year one. Don't listen to the critics and the whiners. Think about the critics of the petroleum industry in 1866 and put yourself in the place of the entrepreneurs and ask yourself, would you get dejected when the price of crude oil traded down 35% and people told you it's a crap business? Because that's exactly what happened to Rockefeller, and what distinguished him is he just always believed that it was going to work, and when everybody else was selling, he was buying, and when they were buying, he was buying, and when everybody was whining, he was building, and when everybody said, you know, in 1909 or whatever, when the entire industry was mature, right? That's when the automobile got invented, and it got 10 times bigger. So this thing is going to be big. There's no reason that credit, digital credit, you know, the credit on gold became bigger than the gold supply. The digital credit may be bigger than the Bitcoin network. If Bitcoin goes to 100 trillion or 200 trillion, there could be 200 trillion of credit on top of it. You know, you may not want to issue it. That's up to you. Someone will want to buy it. You know, and that is the future that the market will determine. And the market is 100 industries, 100 capital markets, and your job as a Bitcoin treasury company, solve the problem, solve the compliance problem, solve the tax problem, solve the issuance problem, solve the credit problem, do the marketing, do the product design, solve the distribution problem, evangelize the future of digital capital and digital credit, and roll with the punches, right? Don't get liquidated on volatility. You know, build the most robust structure you can. But otherwise, we are all, you know, if the Bitcoin miners are the first line of electric defense or computational defense of the Bitcoin network, Bitcoin treasury companies are the first line of economic defense. They're the ones that are going to spread the entire ideology of digital capital, of perfect money. You know, the guys that say, fix the money, fix the world, that's all well and good. But the truth of the matter is you didn't have to envisage that everything else disappears except perfect money. It's not going to happen. So a better thing to be thinking is, if I'm going to fix the money and fix the world, I need to fix the equity, fix the funds, fix the banks, fix the money markets. I need to fix the credit instruments. I need to fix the currencies. I need to fix the policies, fix the politics, fix the ideologies, fix the attitudes, fix the distribution, fix the technology. That's not happening just via tweeting. That's going to be a company in Japan, in Switzerland, in the UK, in the US, in Nigeria, in Brazil. They're the ones that are going to fix all that stuff. And as you create all of these digital, wonderful, beautiful instruments of the 21st century, you're going to win fans and supporters and believers in the political system, in the media, in the economic system, in traditional banking, in traditional finance. They will be brought over to the Orange movement, and then they'll start to believe in Bitcoin. But you know, at the end of the day, just, you know, don't fall into the trap of thinking that, you know, all the world needs is Bitcoin. It doesn't just need Bitcoin. It needs equities and credit, and it needs currencies, and it needs governments, and it needs companies, and it needs funds, and it needs services, and it needs products. And it's companies that are going to create these, and it's hopefully the people in this room today. So thank you for coming, and thank you for being part of this movement. And I look forward to hearing each and every one of your stories.
What's the second best? There is no second best.